Hey everybody, it's me, Max Farrow. Welcome to DexfxWorld. This is the Forex Educational Signals. In this particular video, I want to quickly just show you just an overview, me doing a couple quick trades. A signal just came out about 4 minutes ago. I'm running late within the process, but I just wanted you to quickly see the process that I do. Now, I don't have everything set up. You'll see in a future video, which I call the perfect setup on how I put everything together. So you'll see me clicking around just a little bit here and there. The first thing I always do is I make sure that that I check the news to see if there's any current news happening at the moment. And I scroll down and I see no current news happening. It's 11:19. Everything's out more than an hour, half hour prior to or half hour after. So I am good. I'm going to jump back over to the signals. Now, the signals refer to the timing that they arrive. They will always appear at the top of the hour 15 minutes after. If one's not at the top of the hour, one might be at 15 minutes after. But if neither one appears, it just means that that hour doesn't have a good trading signal. Okay. Now, you will get blocks of losses in major news events. So news avoidance is very important. The signals will still trade. The signals will still put the information out there to help keep you with an understanding, which pairs may lose during news, which pairs may win during news, that kind of information. That's why we put it out there. So if you traded at all, you would have these success rates, these 59%, 63.9%, those 70%, even if you traded through the news. Okay, so if a signal came out, you traded with it, you'd have a 70% success rate with an Audi JPY. Now, with that said, I avoid the news. I stay with the pairs that I really like, and I look for other things. But today, I just want to show you how we trade with it and what we do and the mentality. Most signals, when they come out, you're going to have a open time, you're going to have a stop loss, you're going to have a take profit. Now, why does an hour says stop losses and take profit? Well, they actually do. But it's so common sense to have a stop loss and a take profit that I don't even put it in here. Why? Because it's a waste of time and energy. You should always, always, always have a stop loss in everything you do with Forex. Any person, any trader, any network that tells you you shouldn't, they're a fool. And so are you if you follow it. The problem with not having a stop loss is that if anything happens, President Trump comes out and says that he wants to close down the world, and the market falls out and you're in a buy, sorry, you're going to lose all your money. And they're going to margin call anything else that you have in there, unless you got a couple $1 million in trading, which I'm pretty sure you don't, because neither do I. Okay, and I've been trading for a long time. The process here that we try to show you is that a stop loss and a take profit is very important to be able to find out the levels and be able to see the levels that you're going to be. And we'll talk about that in some price action support and resistance, and in a term that we refer to as looking left. Okay, to find structure. From the history, structure will give us an environment to where we can not 100% guarantee that it'll go to those levels, but we can have a good success rate with those levels, whether win, lose, or draw. All right, so let's get started. Signal comes out at 11:15 for the Audi JPI. Audi USD, I'm sorry. So I look at easily, quickly, is there any news? No news. Great for us. Now, if we have multiple signals, I look at which has the best success rate, and I start with that one. So let's look at that. Audi JPY at 11:15, the open price was 88.72. So we're just going to open up our MetaTrader 4, and I'm going to be using a broker that, and again, we don't support any brokers out there. We go with a broker that that we find that works for us right now. And that's tradersway.com. I'm not suggesting you go with Tradersway or Forex.com or any other broker. We'll have a completely different series for that for you to be able to see. But we're just going to use these guys for argument's sake right now. Okay, let's just pretend that they're perfect. Okay, all right. So we have our MT4 set up. We have our ability to be able to buy directly within this system because we have a nice little demo account going on. It's directly through Tradersway. We're able to access our $50,000 demo, all that kind of good stuff. So let me show you what we do. We got to jump back here because in the setup I'll show you how to set up all these perfectly so you can be able to get back in. But we're looking at 88.72 on the buy. 88.72 on the buy. And we're at 88.74 right now. So we're about 2 pips off. So with the spread, we're going to be a couple pips out of our little process here, but that's okay. So what I'm going to do is that I'm going to go to over here to Audi GPY. Let me find you over here. I'm going to say new order. You could have just hit F9 as well. Now when this pops up, because I want to go right out of the box, as soon as we get the order, I want to go 20 pips up and 20 pips down, right? So I want to have a stop loss of 20 pips and a take profit of 20 pips. This will protect me. Don't worry, we'll alter this as we get in, okay? So you got to do a little bit of math. Let's be real here, right? So we got to talk about, if we're doing a buy, the stop loss is down below, right? So because we don't want it to drop down too far. So 88 point, so 20 pips is 53. See how that works? Okay, good. So now, on the other side, we want to be at a take profit of 88.93, because if we're working with the 3, then 53 and 93. Okay, so 20 pips up and 20 pips down. All right, and then we simply click the direction we're going to go. Simply buy the market. Now, what happens on your system here, and you'll see this if you expand out just a little bit, you'll have a green marker where you got in, okay? And it might be a little bit higher because they add a spread to it, a couple of pips to it. So they're going to add it a little higher, right? So even though that you got in at 88.73, your marker is going to be up at like 8.74 because they're going to add a pip for spread. This is the bid-ask spread. Keep that in mind. You didn't make any mistakes. The company adds the extra pip to it on a buy and removes an extra pip from it on a sell to cover their spread. This is how they make their money, okay? So if you're in a buy, the red line above is your take profit. So if it jumps up to here, it's going to automatically get out of the market. Now, this is an order, which means that if it hits this, it goes into a queue with everybody else, and it's laid down in front of you. Whoever gets there first, whichever one had put it in earlier, it's first come, first not first come, first serve. It's by order of execution. So there's all these things. These are not perfect. There's some companies that use slippage and blah, blah, blah. There's all these games. But let's just pretend that this world is perfect. And this is your take profit. So if you hit this line, it's going to get you out of the market with your positive pips, right? The other line is the opposite. It's your stop loss, which, just like it says, it stops you from losing. Okay, if you were in a sell, your stop loss would be up here and your take profit would be down here. All right, with that said, we are now in the trade. Okay, now our signals use a different process here rather than just give you a take profit and stop loss and says go out and just wait for one of those two to hit, right? We don't do that. We give you an expiry time. Now, at 11:15, the signal came out. And so at 12 o'clock, right really close to 12 o'clock, about 11:55, you want to start wringing your hands and preparing yourself for what we call the zero out. I had to take a sip of coffee. It's been a long day. Okay? And we call this the zero out because it's exactly what we do. We find out exactly where we want to be able to be in this market. Now, you have 3 choices. You can stay in the market, okay? Or you can scalp out for your loss or scalp out for a win. Now, if you decide to stay, you're really going to want to look left, right? Now, looking left is all about finding structure and seeing what levels are at where and what support and resistance areas you can work with and what time frame you're on. There's a whole bunch of things that you can take involved. And as you see, I have no indicators on my chart. I've let the signals be my guide to be my tool. If I added some indicators, such as a MACD or a stochastic, I could easily start to find my mentality of overbought or oversold or directional value or trend or what have you. Or I can simply just use some simple mechanics as price action, support and resistance, and previous price action to be able to help guide me through my decision. Now, once I do have my decision on what levels I want it to be at, say if I wanted to bring my take profit to this point, because I know that if I try to reach all the way to here, it may not get to it. So I might want to adjust that. And you don't have to wait for the top of the hour to adjust that. You can adjust this prior to. And it's simply as easy as that. Of just clicking on the line and dragging it down. See, just like that. I could do this 1,000 times. Doesn't cost me any extra time or what have you. Okay? Okay? But I'm going to put it right about here. Now, if I'm zeroing out and I'm really close to this, that's where probably I would have it. Okay? If I wasn't, I'd probably put it right around in here. The reason being is because this is a nice little molehill where this sort of came up. This seemed to be the area. I'm hoping that it would return to that frequency there. All right. Now, what do I do if I'm really super close? Let's just say I'm really close to this and I'm still in the negative side, but I don't want the bleeding to happen too much. What I'm going to do is I'm going to look left and I'm going to find at least 1 or 2 values that hit that line wherever I drop it at. Okay. So I want to make sure that when I'm zeroing out my trade, that I'm pretty close to where I want to be. All right, so that's about 12 pips. Now, I just saved myself 8 pips of loss if this thing takes a plummet. Okay, if it really comes back down in here, I'm saving myself some pain there. Okay, so the point is that I'm creating some tight margins here, and I know markets will fluctuate and do all that stuff, but I'm creating myself some tight margins here when I'm doing my zero out because I want to take a chance. I don't want to take too much of a chance, but I do want to take a chance on this thing closing out in a positive ROI. That's all I'm trying to get to. Now, if I have some information, if I have some indication, so I have some indicators, I have some experience with the knowledge of this pair, or I see news about to come out or what have you, I could keep this on for an extra half hour to an hour, or whenever I have another signal that may come out that may request me to use my my portfolio. Okay, because the more things you have on, the less trades you can do. Okay, because we got to talk about money management and project management money management and portfolio management, and in your trade series to keep those things in mind. Okay, now here's another thing that you can do. Once you do get into profit, you don't always have to just stay on if you're in the losing to see if you can get it in. If you're in the winning and hadn't hit your take profit yet, let's say you're right about here, you can easily move your stop loss up to 0 to where you started out at, or pretty close to it, okay, within spread distance. The reason being is that if you're going to keep trying to get it moving up, you can slowly move your stop loss up behind where your last bar was, or whatever you feel comfortable with, 4 or 5 pips. It doesn't really matter. What matters is that you're protecting the profit you've already gotten. So I hope that gives you some experience with zeroing out and what our signals are. Our signals are very easy to understand, is that as soon as you get in, you're immediately in a 20 pip profit up or down. You then have to pay attention, look left, take some experience, learn some things, and you're going to learn a lot of this in the future videos here. Okay. As a guide here, I'm going to look at the Auto USD as well right before we leave. At 64%, anything really under 60%, I probably wouldn't engage with, but there's statistics to say within our system too, which you'll see under the results tab, that, filtered and unfiltered. If you went with every single trade that we did in July so far, you would have made 1,527 pips. Not that you could have done that, but if you just went with the ones that were above 60%, you would have made 1,200 pips, about a 300 pip difference, you see, but a lot more time and risk involved. All right, so there's a lot more trading in there. And this doesn't even have anything to do with news avoidance. So we'll talk about that later on. Should I news avoid or shouldn't I? And this, my friends, is completely up to you. All right, I think that this video is long enough. I don't want to take too much of your time. Just try those practices. Whatever system you're using, if you're unsure of how to use Trader's Way or what have you, there's other videos that we have a MetaTrader Mayhem series that you can look at. If you're using any other system out there, it's 20 pips up, 20 pips down. Very simple. Okay, so you should be able to protect yourself. Trade wisely. I'm Max Farrell. This is Dex, and we'll see you in the next video.